celebrating 15 years of Young Turks.
Welcome to this Young Turks special. We are in conversation with two men who over the last decade, and a little more than that in fact, have built out a business quietly.
SVG is an investor, a promoter and an India JV partner for global businesses all rolled into one. Harish Pail and Manish Vij, since 2006, have taken several incubating companies from scratch to exit, and while there have been some fumbles along the way, especially in the internet consumer place, the learnings have served the duo well. In April, the services business of SVG Media, a full-stack ad tech player, was acquired by Japanese advertising major Dentsu. Young Turks talks to Harish and Manish about the rationale behind the sale and what we can expect from SVG going forward.
Tell us about how that deal came about. Were you actively looking at doing this sort of divestment? Were you approached? Talk us through something that we don't know already.
Our strategy was actually consolidation and then take the company public. So we were actually working on that. This happened very bottoms up, that the operating teams were working on some mandates, and then they started working with Dentsu on something, and Dentsu got very excited about the teams. The team started liking them. They came back and they said, hey, can we partner? I remember I was the one who started by saying, forget the money. Like, it's a decent chunk of money on the table and hard to say no. So I said, forget it, let's stay focused on our strategy. And then he kind of said, well, what if we do not sell everything and we retain what we want to grow and scale and stuff which is better placed in somewhere else, in better hands, can we just park with that? And that gives us more gunpowder to go and put more fire in our other plans.
So talk us through that decision making. So if we've understood correctly, what seems to have been sold off to Dentsu now is a large part of the services business, or the operational aspects, as Manish referred to them. What has been retained, more importantly, is Tyroo Tech. Why retain that? What you hope to do with that in the coming years?
The SVG business was growing upwards of 50% year on year. The services business, the three entities and SVG itself. So it was a great business. It was a very emotional moment. I remember just before we were going to the final sign itself, we just kind of took ourselves out. We just waited for about an hour before, just when everyone was waiting for signing, we just waited for an hour to finally say, guys, we are signing. So it's an emotional moment, but the decision was really that, hey, for the business to continuously grow and maybe grow much further, it is best placed and housed under a large services group. And here in the technology part, we'll continue to invest. It's mobile technology is growing very fast. It's changing every day.
Give us a peek into what the future of ad tech is, right? And I ask this in the context of, so there is Google and Facebook, what people refer to as the walled garden, correct, as far as advertising is concerned. For entities like yourself and, outside the walled garden, the InMobis of the world that are trying to do something different, how far will the products that you're looking to build out be different from what the InMobis of the world have, what the Cheetah mobiles of the world are offering? Give us a sneak peek into what we might expect.
World over, if you see, there's a very strong convergence of media and commerce which is happening, right? So I don't think the lines are very black and white anymore, that this is where ad tech ends and this is where commerce begins, and this
or
thing.
Content and editorial begins.
Yeah, so that's what I'm saying, right? So there's a lot of, content, commerce, media, everything is getting converged. And I think in that whole era of convergence, there's a huge opportunity that is coming up to build platforms which will enable more consumption, more transactions.
And from a geography standpoint, our fundamental has been that when we built out SVG, again an antithesis, but we built out a business with India leadership, for India leadership. When everyone was going abroad, going global, thinking that India is a small piece of business, we only built out India business. Whereas now in the Tyroo business, we will be now going global.
We're going outside first.
We're going outside first.
Okay.
Yes.
You talked about India first, and I saw a tweet that you had put out saying that, hey, it's okay to build out $150 million companies. Why is everyone targeting, that $1 billion benchmark? So let's step back and let's talk about Smile Group. Building out businesses, how big should businesses be? Because that somehow has become the benchmark for analyzing success.
Great question.
Right?
I think when compared with what is the maximum value that which you can extract versus how important is your fiduciary responsibility to create exits for your shareholders, whether you're operating shareholders, whether you're investing shareholders. I think at Smile we very strongly believe, or we've learned it, that the latter is more important. And I think there is a little bit of a miscalculation on the exit potential for a lot of businesses in India. I think that's more because the market is very overcapitalized. A lot of companies are raising money at a very high valuation. They're raising a ton of money. What that does is that if you raise money at $500 million valuation or $1 billion valuation, you're somewhere creating the expectation to your incoming shareholders that I'm going to create a $3 billion exit for you. I very strongly believe that we are still few years from that kind of
When you
scale.
say few, do you mean 5 or 10?
Look, that answer would vary for businesses, right?
Let's talk about
businesses.
flavor of the season, e-commerce, and what we are seeing play out, correct?
Look, for the largest e-commerce player in India can still be bought for a few $1 billion, right? But then how many such business models are there, right?
Sure.
When we are talking as an industry or as a market where hundreds of companies are being funded every year, we need to see more exits, right? If Indian internet has to scale, the full pyramid has to do well, right? And the companies in the middle, so we need a lot of $200 million exits, we need a lot of $50 million exits, we need a lot of $400 million exits. A lot of people in the industry have got that number wrong, that they are chasing a number bigger than that a little too early, which creates a lot of boardroom pressure on the entrepreneurs, on the wrong expectations given to the acquirers, and when the acquirers evaluate the build versus buy, the build starts looking cheaper to them because the buy is so expensive, and then they don't do it.
Correct.
And then when you have so much of capital, so I think it's a negative spiral that the industry is taking.
It's a negative spiral, and you seem to be talking from experience, perhaps, right? So while the ad tech part of the Smile business has done well, we've seen that your e-commerce plays or the B2C plays, fashion new deals for you and so on and so forth, didn't really work out. Is what you're saying now actually learnings that you picked up from having invested and incubated those companies?
If you look at what is unique about Smile, right, is that we are investing, building businesses, and doing partnerships with international firms and becoming a preferred India partner or an emerging market partner for them, all through one common platform. But what we've learned with our experience is that there are business models where it is better done by being a passive investor. There are business models where you need more input and more involvement and more ownership and more control. And then there are business models where you can be an enabler to an international global playbook. So the other learnings that we had was India, initially everybody talks that India is a very value-driven market, value-conscious market, but I think it is getting proven in the e-commerce space that access plays a bigger role than value. So I think most of the businesses that we were associated with more discount-linked and value-driven, whereas I think the market has turned out to be bigger for players which are creating access and connecting the smaller towns to the bigger towns, the consumers in the smaller towns to the players in the bigger towns. So.
And we believe that a promoter or a large shareholder is better being a CEO of the business than at an early stage of a company, and that's a very, very important piece of learning that we've had over a period of time, where the skin in the game is very important. So now if you just marry this thing to what going forward, I think there are two most important aspects of our business. One is what Harish talked about, the incubations and the JVs, where we will be partnering with global companies and investing a large investor or an angel investor. That really depends on the business model.
Let's talk about Airbnb, right? So you partnered into Airbnb at a point where they were not actively looking at India, correct? It was more of a mandate to build out international sort of presence for them in a few markets, for which Smile Group was given stake in the company
Yeah.
as a sort of fee to do the work that you were doing for them.
Yeah.
Talk us about that approach and what, that has, that sort of internationalization, that exposure has given you in terms of looking at building out perhaps similar business models here.
Back in 2009, 10, 11, globally there was this wave of copycat businesses coming up all over the world outside of US. So anything that was working in US, there would be 10 clones of it in Berlin and 20 clones of it in India and 500 clones of it in China, and the business model
This
is
of that. Yeah.
this of that,
This
right?
of that,
The business
yeah.
model is working, the capital is available. Pick up a team, throw money on them, and you'll build a big business. And then
You saw that play out actually.
we saw that. Part of that.
We were
We
part
want
of
to
that,
we want to admit we were part of that, right? Not only
Right.
seeing it, but actively part of it. And what we realized was that instead of being on the copycat side of the business, why not partner with the real inventors and give them the entrepreneurial experience, infrastructure, local knowledge about the emerging markets that we have, and help them conquer the world, because they are the real investors. And I think Airbnb was done on that thesis, and of course all the other partnerships have also been done on that thesis, and it's so much more fun because when you work with the inventors, you gain more. And I think there our platform suddenly becomes so much more important, because we have entrepreneurs in residence, we have this whole incubators where the infrastructure is there, we have finance, legal, all the housekeeping services, EIRs. Demystify this complex but large and exciting market is itself a great business in itself, and I think that's one of the core focus areas for us.
On that note, we're going to conclude this interview. Thank you very much for joining us. It's happening. It'll happen at the pace that it has to happen. There are also many Indias, right?
Yeah.
So it'll play out differently at different points of time, and all the very best to you to building out some wonderful bouquet of products and backing entrepreneurs. Thank you very
so
much.
Really,
Thank you.
Thank you.
Really enjoyed. Thank you.
Celebrating 15 years of Young Turks.